Well, welcome everyone to the first episode of our podcast series. I'm Anwili, and today we'll be talking about something that is, quietly reshaping global finance, and that is stablecoins. We'll be talking about stablecoins today vis-a-vis bank transfers, traditional bank transfers, and we're trying to see why hybrid payment rails are becoming like the new standard in 2026. Because so far, we've seen that businesses today, they don't just want their payments to move, they want them to move faster and more predictably across more difficult corridors. And that is what we'll be kind of exploring today. So to break this down, I'm joined by the CEO of Eska Finance, Shalom. Together, we'll unpack what stablecoins are actually solving, what most people misunderstand about stablecoins and crypto, and what's the infrastructure that is needed to exist behind the scenes to make this safe and to make this scale. Shalom, you're welcome.
Thanks very much for having me. Much appreciated. Happy to be the first guest of this inaugural podcast. So,
You're
yeah,
welcome.
and answer your questions.
Thanks for being with us today. So I'll just start with the first question. What problems are stablecoins solving today that our traditional banking rails haven't been able to solve?
I think the number one is connectivity. Stable coins are connected via the fabric of the internet, whereas fiat currencies are connected via a convoluted system of companies, messaging systems, central banks, commercial banks, etc. So really, that access is the biggest one for me.
Okay.
The second one obviously is potentially price, but I'm in two minds about that specific conversation. I think access is the biggest.
Okay, so connectivity which breeds access is what you would say. Okay, so in talking about that, would we then say that traditional banking rails, they don't work well at all, or are there places where they still work well? And in that case, in which sections, in which areas do traditional rails still work well?
Great question. Look, the reality is traditional rails are the bedrock of modern day finance, right? You can't exist really in our world without a bank account.
Mm, okay,
We're in the process of getting a new house, and it's everything is about banking. And if you don't have a
okay,
bank account, you are not essentially looked at as a normal person. And so traditional rails are the bedrock of modern day finance. So nothing is going to happen to that as far as our geopolitical system stays the same. So that's on that side. Traditional finance is the reason stable
mm-hmm,
coins and digital assets exist.
mm-hmm.
And so, yeah, they are, you can't do without them.
Okay, but where would you say they break down these
They
traditional
break
banking
down.
rails?
Oh, fantastic. Sorry, I missed that part of the question.
Yeah,
Almost everywhere, but specifically when trying to move money across borders. Okay.
okay,
Traditional rails, again, as I mentioned at the start, are a convoluted, interconnected system of companies, banks, and, messaging systems, right?
mm-hmm,
Where things get very muddy and dicey with traditional banking systems is if I'm trying to move, large sums of money or just money in general from, emerging markets, for example, to Western markets or vice versa, things
mm-hmm,
become very difficult because the traditional rails don't exist in these emerging markets to support that
mm-hmm.
kind of flow of funds. Does that make
Yeah,
sense?
yeah.
Yeah. So really, it's cross-border payments is where traditional finance really is struggling at the moment.
Thanks for that. I've heard a lot of people talk about, delays in settlement times and stuff like that. Would you say that's like a major problem for these traditional banking rails?
Absolutely.
Okay.
Again, if you really understood the context of how, these messaging systems work in banks, it is really about Mr. I saying, yes, I have seen this, then sending another message to his following correspondent to say, I am now sending you this. So again, I would have to get into the weeds and sort of bottom foundational layer of how
Yeah.
banking works, which I'm not going to do, unfortunately, on
Yeah.
your podcast. But yes, it essentially is quite difficult when you try to move money in these traditional systems. Sorry, I may have gotten lost and I forgot what your actual question was.
No, 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 it's fine. I think you've kind of answered that. So I think one thing we've gotten from here is that it's not that banks don't work. It's just
Mm,
that the kind of global digital commerce that's needed now, in especially in some corridors, they were not built for that.
that is correct.
And
And then
that
the
is
other
where
thing I would say
stablecoins fit.
about traditional banking is that it only really works in highly populated, dense areas.
Okay.
So, there's this trope of, a lot of Nigeria, for example, is still massively underbanked. And that's true. because there is no commercial incentive for these banks to go and give accounts to people in the village,
Yeah.
right? Because again, he makes money from itself, right?
Yes.
That's why our currency needs to move. And so if you as a bank do not see money moving,
Mm-hmm.
right, in an efficient and profitable way in the most remote parts of the world,
Mm-hmm.
that's not a concern for your business as a bank.
Definitely.
But as we've spoken on this podcast, banking is the fundamental infrastructure for the world as we have it today. So you are essentially saying many of the world's inhabitants do not deserve to be looked at as inhabitants of the world. Does that make
Yeah.
sense? And
That
because
makes
of that fundamental problem, banking it only works when you are in cities and populated areas. So yeah, it works. It works when it exists.
Yeah, and that's why we have the unbanked and the
That's
underbanked people
correct.
today.
That is
All right,
correct.
thanks for that. So for our audience or some people who might not know, this whole crypto stablecoin Web3 as a whole is very confusing to a lot of people. What would you say is the difference between crypto payments and crypto rails? Because some people confuse them.
That's a very good question. Crypto payments are payments that are received by the beneficiary in crypto. And then that
Cryptocurrency.
has a utility for that cryptocurrency. Maybe they are dealing with a provider that receives payments only in crypto,
Mm-hmm.
investors and you're trying to enter the cryptocurrency market, whatever the case might be. Crypto rails are payment rails that operate through crypto. Okay. So what, for example, is I could send you Bitcoin, right? But realistically, you actually want dollars.
Mm-hmm.
I am using a provider like Eska.
Mm-hmm.
You can send Bitcoin to,
Mm-hmm.
you will be settled or your beneficiary will be settled fiat currency. So that's a
Okay.
crypto rail. It is
Okay.
how traditional and digital money currently moves in order to have utility to the beneficiary. And most of the time, that utility is in the form of a fiat currency. Okay. The movement part of the money only happened on chain via a cryptocurrency or stablecoin. A
Okay.
crypto payment is me, for example, buying tokens on Uniswap, right?
Mm-hmm.
Trading in, ICOs and, essentially investing into the cryptocurrency market. I will pay in this ecosystem only in digital currencies. There is no need for fiat currencies in that ecosystem. So that's how I would define it. I'm sure there are many people that could see this and be like, well, no,
I actually quite agree with your definition. Yeah. Crypto payments is exchange of value, consumer exchanging value by paying in crypto. And the crypto rail is the infrastructure layer that is needed to move this value, like ESCA, like you rightly said. Yeah. So I hope that clarifies it for a lot of people.
yeah, it's indeed
Talking about crypto rails now and crypto, how do businesses avoid volatility risk when using crypto?
great, great question. Number one, it's always important to use in the form of stable coins, for example, always use a verifiable liquidity backed stable coin. The biggest two in the world are obviously Tether and Circle, where they have fiat currencies somewhere in the world that back the value of the stable coin. And so with stable coins, the volatility risk is almost, inexistent. Obviously, there's still some volatility risk, etc. But again, high level tokenomics, not going to talk about that. But yes, you can highly avoid this sort of volatility by using stable coins. Crypto itself is volatile, right? So if we're talking about cryptocurrencies like Bitcoin, for example, Ethereum, for
Yeah.
example, these are volatile assets. The
Mm-hmm.
reason volatile is because, as many people may not realize, the crypto market is still very, very young. So liquidity is not superfluous, right? There isn't 100 billion Bitcoin in the world.
Yeah.
Because of this smaller level of liquidity, it's very easy for these pots of liquidity to be concentrated around people who have the ability to acquire lots of this liquidity. And in order to avoid volatility, what you don't want is having too many people having too much of one asset that
Mm-hmm.
can influence the market. So where I see Bitcoin's volatility, especially Bitcoin and other sort of crypto specific assets, it is the constant buying and selling of this asset type, an asset class that will always sort of move this value. Now that's one side. I think the second side is in itself the lack of liquidity. It's such a young market that any small price movement can change the overall price for the entire ecosystem.
Yeah. Get
So
that.
because liquidity is lower, it's easier for price to move. And if price is easy to move, it's going to move all of the time,
Yeah.
which lead to volatility. So again, without going into too much nerdy talk, that's kind of how I see the volatility of the crypto industry happening at the moment.
Okay.
Hope I
So would
answered
you?
the question.
Oh, yes, you did. So I was just curious. Would you say it's better for businesses to use this stable coins, let's say stable coins now, as settlement tools just to settle and not really hold them for a long period? Would you advise that?
So for me, I don't actually see the differentiation between stable coins and fiat. So just like you are holding fiat currency in your bank account right now, I think people can do the same with stable coins. Genuinely. I
Okay.
also think the same with crypto, right? Because again, the nascency of this market and how, young it is, etc., it's only going to grow. Like for
Yeah,
me, Bitcoin specifically is going to become one of the most significant asset classes and asset types of our generation. And my
we've heard that. Yeah.
so I do believe it's valuable to hold, not just as a store of value. Well, Bitcoin specifically as a potentially a store of wealth, not of value.
Hmm.
Stable coins as a store of value that can be used as a utility in today's world. So I would recommend everybody to have crypto. Everybody.
Okay. Thanks for that.
I hope I was.
Oh, yes, you did. Where you don't, I will ask for clarification.
Thank you. All
So
right.
let's talk about hybrid reels now.
Yeah.
Yeah, Escal, we talk about Web 2.5, bridging, stablecoin, and fiat. So why would you say hybrid rails are becoming more mainstream nowadays?
Speed, right? And liquidity in some markets. As I mentioned before, where traditional rails break down is really when you are trying to move value across borders. Every country has or is starting to have fantastic ways to solve for internal money movements. But then when it comes to moving that liquidity across borders and out of the country, or even receiving liquidity into the country, it gets very difficult. So that's where I think hybrid rails really benefit, right? Instead of relying on a USD, say for example, I'm sending dollars to, I don't know, America, right?
Yeah.
And I'm sending it from a UK account.
Mm-hmm.
I need to rely on my bank, right? And how robust their Swift messaging system is in order for my bank in the US to receive that USD.
Mm-hmm.
Whereas if I did it via stable coins, I could, in an ideal world, send that stable coin directly to my bank in the US and then just convert that stable coin to USD inside of my banking app in the US. Now I've cut down a transaction that could be 24 hours or more into a few minutes, maybe an hour, right? And
Yeah.
so why this is important, especially at large volumes, is if I needed that USD to do something else, maybe I wanted to pay for something, or maybe I wanted to even swap that USD to another currency, speed is important because price volatility happens in milliseconds.
Yeah.
And so I could potentially be making or losing more money depending on how quickly my money arrives at its destination, right?
Yeah.
And then obviously, if it's a payment term, I could be under penalties if I don't receive my payment on a certain time at a certain date. And then, God
Okay.
forbid, when I'm sending that payment, that USD from my UK account, my bank needs to do verification. Now they're calling me,
Yeah.
asking me questions, da da da. That's more time that's now being taken. Obviously, they're doing their
Mm-hmm.
job and they're trying to make sure I'm secure, which is wonderful. But again, time is not on my side, right?
Mm-hmm.
So stable coins completely eradicate that. And they can also be cheaper in certain contexts, but I don't believe price is not the massive sort of competitive edge that stablecoin have. It is the speed for me.
Yes, you would say the speed, and
I agree.
that is kind of actually it resonates a lot because I just spoke to a potential customer earlier this week, and he was saying something about payments taking 10 days to settle from to USD, and I was like, 10 days, that's crazy. So
Insane.
yeah,
Imagine if someone said that to you.
and it
Yeah,
looked
I've sent
normal
the
to
money.
him. It was
Yeah,
pretty normal to him. Oh, 10 days, and I was like,
okay,
what?
that's okay. Like, imagine if that was you in your everyday life. I mean, you couldn't function, you know?
Yeah.
So yeah, this is what businesses face at the moment in many countries.
Thanks for that, Shalom. So, for people that might not really understand, just kind of explain more. What role do exchanges or liquidity providers play behind the scene of all this? Can you just explain that
Great
flow to
question.
them?
The liquidity providers are the ones that are actually supplying the currency that is being used in everyday life, especially from a commercial context. They are the ones that are giving the level of liquidity required for individuals like me and you to access currency. And then exchanges are, again, a massive player in connecting the two worlds, Web3 world and the Web2 fiat world, right?
Mm-hmm.
Because of them, you are actually able to get physical dollars for your Bitcoin. It's because of them you're actually able to get physical dollars for your Ethereum stablecoin, etc. So
Yeah.
they play a massive role by creating the environments where these
Mm-hmm.
digital assets have physical value
Mm-hmm.
and the ability to move those digital assets out of the digital world into the real world. And then obviously on the LP side, they are the reason that you have the ability to acquire currency in the first place. Uh,
Mm.
so that's how I see it. I mean, as an LP ourselves, we know that the liquidity that we offer to our customers is being used downstream by their customers, which has an actual utility. And so if they were not able to get that from us, obviously they'll be able to go somewhere else, but then that'll skew pricing and that'll make
Yeah.
it more expensive for their end users and all sorts of potentially negative side effects.
Yeah. Yeah. Thanks for that. Something I've been able to get from our discussion so far, I just wanted to confirm if that's correct, is that we are saying this hybrid rails, it's not like replacing banks, it's kind of augmenting them. Would you say that's correct?
Yes, definitely. I mean, look, our world does not exist without banks. And I think it's very important for people to actually understand the history of finance, right? The world that you live in is essentially controlled by banks.
Yeah.
Forget politics, forget all this other stuff. It's the banks that really run your day-to-day life. And so there is no existence of another financial system without the banks. You understand? So we're very much an augmentation tool, not a
Yeah.
replacement tool. Now, personally, my own personal opinion, this is not Eska's opinion, but I do believe that that's a problem. I do
Okay.
believe that
Why?
look, I think human beings should be the authors of their own destiny.
Okay.
I think every man and woman on planet Earth deserves to dictate how their life should go, right? By handing over your entire financial life to another entity, for whatever reason you say, trust, safety, security, whatever,
Mm-hmm.
you are essentially giving control of your life to somebody else.
Yeah.
And let us be very frank about this. That person's existence is to better the world for their ecosystem, not you.
Mm-hmm. Even though
I
they
want to
say
make that
they are bettering it for us.
us is a very handful, is a very small number of people. Let me
Mm-hmm.
put it that way, right?
Mm-hmm.
And the reality is, in order for us as humans, everyday individuals who actually run this world, and we essentially are the working system and the foundation behind the
Mm-hmm.
world today, you don't control your life because your money is sitting with another
Mm-hmm.
entity. And for me, I genuinely believe that crypto and, stable coins, etc., could be a potential replacement to the natural financial system, but I cannot say any more than that. And I will stop. I will stop there.
Thank you. Thank you for that. Now, when we talk about this whole Web3 and crypto stablecoin thing, a lot of people are still very, what's the word? Let's say iffy. There's still this uncertainty, phobia around it. They're not really sure. So for a company now, what are the biggest like operational mistakes a
Mhm.
company can make when adopting crypto rails?
Great question. Not understanding the commercials that are associated behind adopting crypto rails,
Mm-hmm.
and also not fully understanding the benefits, right?
Okay.
I think many businesses, just hear buzzwords and are like, oh, okay, this is nice. This sounds
Sounds interesting.
right, but they don't fully understand how we could either better or worsen their current operations. I think it's very important for a lot of businesses to really ask themselves, number one, do you actually need stablecoins? Like, let's be real, right? I'll give you an example. If you are a UK company, all of your customers are based in the UK. All of your suppliers and vendors are based in the UK. The only currency that you need to manage is GBP. Why are you getting stablecoin rates? It makes no sense,
Mm-hmm.
right? You have
Because there
faster
is no
payments.
exchange there.
There is
Yeah.
zero exchange and there is zero value at stablecoin rails. Now, if they had vendors in the States, for example, and they were importing or exporting from American businesses, again, I'm using America because USD, right?
Yes, yes. Get that.
Then it would make sense. But if you are buying from UK businesses, selling to UK businesses, and in general use GBP as your primary and really only currency, it makes no sense to you to go and get any stablecoin rails. You understand? So really understanding the value. I think
Mm-hmm.
many misunderstand the value. They hear buzzwords and are sold on those buzzwords, but their need and their actual use cases inside of the business don't necessarily align to the
Yeah.
adoption of them. So I think it's very important to understand what your use case is, what the value of stable coins will be to your business,
Your
if any.
business, yeah.
And then number three, will it cost you more or save you more? That's the reality.
That's the
In
commercial
some,
part.
you understand. In some cases, the reality is it can sometimes be more expensive. And I'm going to be super honest, right? This is why I don't say, this is why
That's
I
new
don't use,
because I've always heard like it's cheaper.
it can be cheaper. So let's say, for example, you are using a hybrid rail, right? You have to remember that there's a cost usually to move the stable coins. It's a very negligible cost, extremely negligible cost. But there is still a cost associated to sometimes
Yeah.
moving stable coins on chain. But then the biggest cost comes when you want to convert those stable coins to real physical fiat
Fiat.
money,
Yeah.
right? That's an additional cost. Now, if you are just using fiat rails, right, and you are choosing price over speed, then that cost of moving between stable and fiats, aka off ramping, is not
Mm-hmm.
required. You can save that. But many businesses don't think about that cost when they are listening to stablecoin salesmen trying to pitch them a new tool, right? So that's what I'd say is just be conscious of those three things.
Okay, that makes sense. Thanks for that. In terms of compliance and controls now, what are the most important controls businesses should have if they want to go into this?
Security and, security is the biggest one in terms of who can access your wallets, who's managing that infrastructure for you, and who has custody of your funds. Okay. The custody piece is usually overlooked because, again, many people don't fully understand how the product in itself works, right? But who actually holds the keys to the wallets that your stable coins are in? If it's you,
Yeah.
happy days, you have what I call 360 control over your stable coins. Okay.
Mm-hmm.
If it's someone else that is managing the access to the wallets where your stable coins are held, again, similar to banking, that money is actually owned by that person who has the keys. You are
Mm-hmm.
just renting your own money, which is what you're doing today with banks. Okay. As soon as you put money in a bank account, it's not your money anymore. It belongs to
Yeah.
them. Okay. So you are renting your own money. So that's again something that a lot of people overlook is how much access do I really have to these funds? And if you do not own the private keys, then I'm sorry to tell you, you do not fully own those funds.
Mm.
Contractually, you do all of this, da da da. But again, God forbid, if Armageddon happened tomorrow and you needed to
Mm-hmm.
pull money out, you have to make at least 15 phone calls before you can reach somebody that can reach somebody. Whereas if
Wow.
keys, that's your money. You get on a plane and leave whatever
Yeah.
issue is happening where you are.
Whatever chaos is ensuing.
Whatever chaos, you just get out of there, man. Don't
I think
need to
that's
talk to
giving
anyone.
people something to think about.
Agreed.
Thanks for that.
Cool.
In 2026 going forward, what kind of companies or industries would you say should be adopting hybrid rails and why?
Great question. Payroll companies,
Okay.
for one. Anyone that needs to make payments to multiple people in different countries.
Mm-hmm.
Number two would also be obviously Web3 companies already have access to these rails. Payments companies, right? So being able to, offer stablecoin infrastructure to your clients
Mm-hmm.
definitely a big one. Outside of payroll, payments, financial services firms, even if you don't really do a lot of money movements, I do believe having custody of stable coins and crypto should be
Mm-hmm.
on map as a financial services firm. There's many reasons for that, but financial services is number three. And then number four really is just everyday corporates. Okay. I think having, as you have mentioned, another option to your
Mm-hmm.
typical banking system is important for everybody, both individual and business. So,
Yes.
normal corporates that are into importing and exporting,
Mm-hmm.
energy, transport, anything that will require them to access another foreign
Currency.
currency,
Yeah,
have stable coins within reach. Those would be
that
the
makes sense.
top four for me.
So if your business falls within any of these industries that he has mentioned, it's time to start evaluating. Call Esca. Thank you for that, Shalom. We're about to wrap up. I just wanted to ask because I know even me, I've heard a lot of misconceptions about crypto, stable coins. A lot of people say a lot of things. What would you say are the biggest misconceptions you've heard or you think people still have about stable coins and crypto?
I think it's miseducation really. And the biggest one is, it's not safe, or oh,
Mm-hmm.
it's risky, or oh,
That's the biggest one, really. Yeah.
it's not safe, it's risky. Look, let me be honest. If someone
It's
had told me
speculative. It's
you,
unregulated.
you're unregulated, first of all, it's regulated now almost everywhere, quite literally, and more regulation is gonna come down the line.
Mm-hmm.
But again, I use the same concept of if I existed, in the what was this, 13th or 14th century, when quote unquote money was created, and somebody
Mm-hmm.
said to me, just give me your life savings, I will look after it for you. I would. I don't know what you would say, but I know exactly what I would tell that person, right? So I think it's that same sort of chasm that crypto is at now.
Yeah.
The understanding is starting to slowly increase, but
Mm-hmm.
adaptation is, people are very wary of doing new things. So
Yeah.
really, it's about security and safety, and those are not even concerns for someone like me.
You would tell people that those are non-issues right now. You heard it from Shalom. Thank you very much. So, yeah, thank you so far. I think it has been very informative and insightful. So, basically, if we zoom out, what we're seeing this year and going forward is not really a battle between banks versus crypto rails. It's just, the rise of hybrid infrastructure to kind of help what those banks are already doing. So, for a business, I think the best thing would be to choose the fastest, the safest, and the most efficient rail per transaction. Like you said, just to have options and just choose which one is the best for a transaction at a particular time. And you can only do that when you have enough education. You understand these things very well. Thank you so much. So before you go, Shalom, if you had to give one piece of advice and one piece of advice only to maybe a CFO exploring stablecoin rails this year, what would it be?
Do it genuinely. If you
Short.
are CFO, head of treasury, and you are looking at, should we do it, should we not? The only answer is do it. The world is moving at an incredible pace. And I think it's important for anybody who is in this world, both technology and finance, to
Yeah.
have access to both Web 2 and Web 3 asset types.
Mm-hmm.
And yeah, I think it's important for you to have that ability. So access it, speak to companies like us, to educate yourselves on how you can get into it. But definitely having access to Web 3 digital assets is very important.
Thank you very much. Like Nike would say, just do it.
Just do
And
it, man.
that is what Shalom is saying as well.
Just do it.
Thank you very much, Shalom, and thank you to everyone that has listened in on this. If this episode has helped you clarify the difference between crypto hype, crypto infrastructure, rails, and everything, make sure to subscribe, give us a follow anywhere you're watching this. And if you're a business trying to explore cross-border settlements into Africa, trying to explore hybrid rails, the ESCA team, we're always here. We're always open to conversations. So feel free to give us a shout and we'll be ready to, take that journey with you. Thank you all for tuning in. Thank you, Shalom, for joining.
Thank you. Thank you for having me.
See you all in our next episode.
All right,
Bye.
guys.